there is an unknown crisis lurking in the shadows. There is a huge crisis out there, and it's the American credit card debt just hit a new high of $1 trillion. Oh, the American economy is on the brink. There is an unknown crisis lurking in the shadows. Now, this is impacting not just me, but also you, your neighbors, your friends, everybody around you, right? There is a huge crisis out there, and it's the American credit card debt just hit a new high of $1 trillion, right? And in fact, this person here, a Bloomberg opinion says credit card debt at $1 trillion is a sign of consumer strength. Well, I got to tell you, I couldn't disagree more with this person. Sign of consumer strength? No, I think that this is a sign of a crisis that is lurking in the shadows. And before we get into it real quick, my name is Christopher Yule, and we cover the biggest headlines of the day and what the AI trading data says about them. And if you're interested in that too, be sure to definitely hit the subscribe button down below. Today's episode is sponsored by Outlier.com. Go to OVTLYR.com to see why outliers win. Now, back to the story here. Credit card debt hit $1 trillion. That's not a sign of consumer confidence. That's a sign of consumers are freaking broke. Are you serious? This is a huge problem. Let's jump into this story on CNN, which I'm not a huge CNN fan. We all know that they like fake news over there, but they do have a much more down-to-earth and grounded opinion than Bloomberg, apparently. And let's see, American credit card levels have just launched a new undesirable milestone for the first time ever. They've surpassed $1 trillion, right? Rising credit card debt and auto loan balances help to drive overall housing debt levels up 1%. to 17.06 trillion for the quarter. Household debt has spiked by nearly $3 trillion since the end of 2019 before the pandemic. And I mean, just look at this chart here. You can see credit card debt. People were paying off their credit cards with their stimmy checks that they got, which was great, but they can't do that anymore. Now inflation has gripped America, and that's why I say this is a crisis. This is not good, right? The unknown crisis that's lurking in the shadows is this right here. People cannot afford their day-to-day lives anymore. People cannot afford their groceries. People cannot afford their childcare. People cannot afford new clothes, and they certainly cannot afford those new cars that GM and Ford are charging $100,000 for a truck. And Tesla, on the other end of the spectrum, is lowering their prices every single day. Be sure to check out that video. And we talk about this constantly, that inflation is here to stay, and in a horrible way, until we see something break. I really think that we're going to see a rubber band effect. And this is the first half of the rubber band, right? People cannot afford their day-to-day lives, so they're just racking up that credit card debt in order to just pay the essentials. Interest rates feed through from the federal funds rate, and it's impacting mortgages and credit cards and everyday consumers, right? Credit card balances have risen for 5 consecutive quarters, as some of the largest speeds, the largest rate of increases in the last 20 years. What's driving its inflation? Higher interest rates and generally how expensive life is in 2023. Everybody's feeling this impact, right? This is a huge problem for everyone out there. It's not just you. It's not just you. Everybody else is feeling this. And we need some really smart people to come in and fix this. And a 2% inflation target, which is what Janet Yellen wants to get back to, it's not going to fix anything. Because 2% inflation still means prices are going up. That doesn't change the fact that prices are still steadily going up. We need a uninflation. We need, I don't want to say deflation, because deflation sounds great on the surface. But we go back to the UAW workers story, which we just talked about. If we had deflation, the price of those vehicles would come down. If the price of those vehicles came down, the UAW workers would start to get laid off because the auto companies can't pay their existing salary, and they certainly can't pay any raises like they're trying to negotiate right now. And while it sounds great for consumers to have that deflation, if we deflate too far, nobody's going to be buying anything, and we're going to have some huge problems in the economy, because if I'm not buying cars, I'm not buying tires, I'm not buying gas, and everybody in that industry has a huge problem on their hands. So we don't want to see deflation necessarily, but we do need to see inflation start to go negative, which I don't know what the term for that is. Uninflation, disinflation. So that's what we really need to see, and that's what we're going to need in order to help people get off of this trajectory right here. Because we got major, major problems when we can't even afford groceries because our credit cards continue to go up. At some point, the credit card's going to get maxed out. And then what happens? Not only that, but student loan payments are about to restart. That's awesome, right? If I remember correctly, I believe Joe Biden said we're going to wipe off 10, 15, or whatever $1,000 of student loans. Joe Biden said we're going to wipe off $15,000 of student loans, and that ain't happening. And not only is that not happening, you're about to have to restart paying those loans, and you haven't had to do so for the last 3 years. So even though credit cards are hitting new all-time highs, don't worry, you actually have less money. Because all those student loans that you weren't paying on, you're about to have to start paying on because Joe Biden couldn't keep his promise. So I'm not too excited about this. I think we have a huge, huge crisis on the horizon. Let's take a look real quick at the AI trading data for Capital One, right? One of the big credit card issuers out there. We got a sell signal back on August 4th for Capital One. As you can see, it's actually been moving down pretty steadily after that point. So I would definitely recommend going to ovtlyr.com to get this AI trading data so you can have this every single day. Now, let's go see what people are talking about. Do you agree with this Bloomberg article? It's a sign of consumer strength. No, I don't agree with it. And in fact, I think this person who wrote it is a fool. Let's scroll down. If you believe cutting off your head is an effective weight loss method, then yeah. No, that's kind of exactly what they're saying here, right? It's great if you're a bankruptcy attorney. Rates are all-time highs with debt load over $1 trillion. Hey, what can go wrong? You guys owing us money is a sign that you guys have money, right? That the sarcasm there is very strong, right? If you have money and you need to take out your credit card to buy these things, then I don't think that that's how it's supposed to work. Yeah, basically the whole sentiment here is that being a serf isn't a strength. The whole sentiment goes around the fact that we can't afford our day-to-day lives right now. And credit cards the balance is going up is not a sign that consumers are happy and excited and willing to buy more. It's a fact that the economy is struggling. But the administration does not want to admit that they've messed up a lot. And we have a long, long way to go. Hey, if you like this video, YouTube thinks you're going to love these two.